What's up, traders? Welcome back to the channel. So today I'm going to show you how to buy NVIDIA stock at a up to 19% discount from the price that it is today. Now, if you're not familiar with NVIDIA stock, well, one, you've been living under a rock. But secondly, it is the worldwide leader in GPUs, which is being used to power all of the new AI things. And as of today, NVIDIA's chips are in high demand. They are in such a demand that NVIDIA stock has gone from a low of $10.81 back in October of 2022, all the way up to a high of $140 as recently as June of this year. But it's not just one of your hype stocks that is going up for just no apparent reason. NVIDIA is going up for a good reason. If we look over here at their financials, we can see back in 2020, they made $10 billion. And if you look at their current year, they have made $60 billion in the year ending in January of 2024. But it gets even better than that. If we look at the quarterly revenue, we can see that every single quarter they are growing. So $13 billion in July of 2023, $18 billion in October of 2023, $22 billion in January of 2024, $26 billion in April of 2024, and $30 billion in the latest quarter of July 2024. A company growing this quickly and growing their revenues at such large numbers quarter over quarter is almost unprecedented. And AI is just going to get bigger and bigger, and NVIDIA is going to be at the forefront of it all. If we look here, even Larry Ellison and Elon Musk begged NVIDIA's Jensen Huang, which is their CEO, for more GPUs over a fancy sushi dinner. So we have two of the world's richest people begging this man for more of their product, begging him to take their money. When your product is that good that you have billionaires begging, you probably have a very good business. And I personally, because of this demand and because of the trajectory of artificial intelligence and NVIDIA being at the forefront of it all, I believe by sometime in 2025, NVIDIA stock will be in the $200 price range. But don't believe me. Let's look at what the analysts have to say. So we can see here, these are the analyst target prices. So we have a high target of $200, a mean target of $149.99, and a low target of $90. Now this is with 41 different analysts, and they all have it as a strong buy as of right now, and the price is currently $122. Now with that being said, their price to earnings ratio for the last 12 months is currently at $55. Now while that's not the most expensive stock in the world, I would like to get it at a much cheaper price. You know, buy low, sell high. And I think that $100 would be the perfect starting point to start buying NVIDIA stock. So here's how we're going to do that. The best way in order to buy a stock at a cheaper price than it's currently trading at is to sell puts. Now, for people who are not familiar with selling puts, when you sell a put, you are agreeing to buy a stock at a specific price at a later date. But since you are agreeing to those terms, you get paid money up front. Let me show you how that works. So we have NVIDIA stock here, and it is currently $122. So I decided that I want to buy it at $100. So we'll place $100 here and we'll sell a put. Now it is currently trading up here. So I'm going to sell a put, and let's say 43 days out from today. And let's say I got paid $135 in order to sell that put. All right, so I received $135 for selling the put. Now, over the span of those 43 days, NVIDIA stock price is going to move, it's going to continue to move. Let's say by the end of the 43rd day, NVIDIA stock price is above the $100 mark that we set. Well, from there, you get to keep your money, that $135 that we received, and you go about your day. Now you can decide to sell more puts at a lower price if you want to, or you could just do nothing. It's totally up to you. But we made money. We made $135 just to wait. Now on the flip side, what if NVIDIA stock finished those 43 days under the $100 price? Let's take a look. So same exact scenario. We have NVIDIA over here, currently priced at $122. And we have our strike here at $100. So let's say over the 43 days, NVIDIA kept moving and it finished below. Well, now we are forced to buy the shares of the stock at $100. And every contract is worth 100 shares, so you would need to buy 100 shares of the company at $100. Well, here's where it's a win-win situation. I'm either going to get paid to wait and not get the shares, or I'm going to get paid to get the shares of a company that I already like, that I already think is going to go higher at a much cheaper price than what it was selling for back when we started the contract. So when you do this strategy on good companies, there's really not any way to lose. But before I place the trade, if you found this information helpful, I would love if you came and joined my community called Trade to Freedom. If you're tired of the 9 to 5 and you're looking for a way to create sustainable income every week and every month, then Trade to Freedom is for you. This community and course will teach you everything you need to know about options. No fluff, just real strategies that work. The exact strategies that I've used in order to bring in multiple six figures every single year from the stock market. And with direct access to me and my live trades in real time, you'll get the actual trades that I'm using in order to make money for my family and I. You'll have the support you need to turn this knowledge into real results. It's not just a community and course, it's a path to financial freedom. And I'll be with you every step of the way. So now let's make the trade. All right, so now I'm in Thinkorswim, which is Charles Schwab's platform, but I've already put NVIDIA's ticker symbol into the options chain, ticker symbol NVDA. And now we need to select our expiration date. Well, I kind of cheated before. If you remember when I did the drawing for you, I said 43 days out. Well, that's exactly what we're going to select. 43 days out, which is November 15th. And I said I wanted to buy the shares at $100. So we'll scroll down to the strike of 100. And we can see it is right here. Now, it currently has a bid and ask spread of 1.35 to 1.39, which means we'll receive anywhere between $135 to $139 for placing this trade. And if we look over here to the delta column, now delta is just the probability that the event occurs. So it is saying right here there is a 0.11 delta. So that means that NVIDIA stock has an 11% chance of reaching $100 by the end of this expiration date 43 days out from now. And me personally, I always select delta somewhere between 0.10 and 0.20. So this falls right into that range. So if I'm fine with that trade, I can go ahead and place it. I will right click here and select sell and select single. And from here, I select how many contracts I want to place. In this case, we'll do 5 contracts. Now come over here and hit confirm and send. And you can see right here, I will receive an immediate $672 for placing this trade. That's how much I'm going to get paid immediately just to wait around. Now here's where the deal gets even sweeter. Like I said, I will typically go up to a 0.20 delta. So if we come over here to this column, the delta column, we see 0.20, that is at the $108 strike. So if we were to sell puts at that strike, we'll receive anywhere between $277 to $283 per contract. So if I were to do the same amount here, I'll right click, hit sell, hit single, and then I'll do 5 contracts just like before, hit confirm and send, and we can see here I would make an immediate $1,382 for placing this trade. This is all over a company that I believe is going to be much higher in the future. So whether I get paid just to wait around and I never get the shares, or I get paid to wait around and to buy the shares, I get paid either way. Now, I know you're probably saying, well, Rashad, I have a smaller account, so I may not be able to place those trades because you have to buy 100 shares of the company. But there's always a workaround. Well, that's where a leveraged ETF can come in. Ticker symbol NVDX is a leveraged ETF to NVIDIA. Now, what is a leveraged ETF? It is simply a fund that aims to deliver multiples of the performance of a specific index or stock. And most leveraged ETFs either multiply the return by 2x or 3x. And they are great for short-term trading, and they are great for selling options on. Now, if we take a look at NVDA, we can see that it looks to multiply NVIDIA's returns by 2x. So if NVIDIA is up 1% for the day, NVDX would look to be up 2% for the day. And the same thing works vice versa. If NVIDIA is down 1%, then NVDX would look to be down 2%. And because of this added volatility, the premiums that we receive for selling puts on this stock are amazing. And as we can see here, the stock is currently only $14. So if you have a small account, you could easily be able to trade this stock as well. So let's head back to Thinkorswim and place a trade on NVDX. So I currently have NVDX pulled up on the options chain, and I'm going to go to the exact same expiration date that we were using before, November 15th. If we click on it and we come over here, like I said before, I want to select a delta somewhere between 0.10 and 0.20. So it looks like either the strike of $10 or the strike of $11 will fit the bill. Well, let's say we want to go ahead and select the $11 strike. We can see that we will receive anywhere between $40 and $70 per contract for an $11 strike. And usually you get somewhere in the middle. So let's say we would receive about $55 for selling one contract. Let me show you how amazing of a return that actually is. So in order to calculate your return on investment when selling options, here is the formula. So we will do premium received divided by the money at risk, and then we'll multiply that in order to annualize it by 365 days in a year, and then divide that by days in trade. And then we'll multiply that by 100 in order to get our percentage. So we already know we'll receive about $55 for placing one contract, and then our money at risk is a strike times 100. So we selected the $11 strike, and it includes 100 shares within the contract, so that is $1,100 at risk. So $1,100 and then 365 days and divided by 43 days in the trade times 100. 55 divided by 1100 is 0.05. And then 365 divided by 43 is 8.48. And then we'll times that by 100. 0.05 times 8.48 is 0.42. And then if we times that by 100, we get our percentage of 42% return annualized. That's a 42% return. The stock market averages 10% per year. We're getting a 42% return doing this exact trade. And that's not even bringing in adding the strategy of covered calls, but we'll save that for another video. Listen, thanks for sticking around. If you're ready to make that transformation, come join us. Come join me in the Trade to Freedom community. You'll get full access to me. You get my exact trades in real time. Quit delaying it. Quit holding it off. Come make that transformation. I want to help you. I'll see you guys in the next video. Peace.